Guys, so in this video, we're going to talk about gold investing and whether or not you should invest in gold. I want to talk about gold in general and kind of go over my thoughts on the metal. Now, if you've watched this channel for a while, you probably already know those thoughts on gold, but for maybe those of you who are new, or maybe I didn't cover something in some of those other videos. So we're going to kind of just break down gold all together, talk about the returns, talk about its performance relative to stocks, real estate, and things of that nature. But we're also going to look at why gold might be a good investment and why gold might not be a good investment. So anyway, guys, without wasting any of your time, let's get started. So first off, I want to say thank you guys so much for your support. You guys have helped me cross 1,000 subscribers. So if you are not subscribed to this channel, you might want to do that right now because we talk about stock market, talk about investing, talk about everything that has to do with making money, investing money, and just all of that combined. So anyway, guys, thank you so much once again. Now, here's the gold spot price, and this is pretty much live. I just put this on here like 15 minutes ago when I was working on this presentation. So right now the price of gold is at $1,777, as you can see. And we're approaching those all-time highs. So like back in 2009, the price of gold got up to about $1,950 per ounce, almost $2,000 per ounce. So we're getting very, very close to the all-time highs. I mean, at this point, it's not going to take much to get gold to a higher price. And the thing with gold is that it typically does well in a loose fiscal environment. And we're going to talk about that on the next slide because let's go on to the next slide. We'll talk about that more. So, this is the bullish case for gold. And as I just mentioned, loose fiscal policy by the Federal Reserve and other central banks around the world. So that's going to create safe haven demand because people get fearful when the Fed prints money, they have interest rates at zero. And that's what we saw on this chart right here. I mean, when you look at this and you see this big run up back in 2010, and put my mouse over there, you'll see that it came all the way up here. It took a few years for that to happen. I think it was like 2 or 3 years. 2011 is where it peaked. But the point I'm trying to make is that when the Federal Reserve and central banks are loose with monetary policy, when they're printing all this money, when they have interest rates at zero, that's when gold typically does well. And as you'll see here, coming back to, this is like 2020 right here, coming back all the way since the beginning of 2020, since we've had the coronavirus, since the Federal Reserve has been pumping all this liquidity, all of this money into the system, the price of gold has done very well. So that is one factor that could impact the price of gold. And I think if the Federal Reserve keeps on just injecting all this liquidity, which they said they're going to do, then gold will continue to do well because 2022 is when the Fed said they're going to at least run this out until 2022. So Jerome Powell came out and said he's not even thinking about raising interest rates. And so you have a central bank chairman who is, he used to be actually kind of a tight with monetary policy. I think everything going on, he's had pressure from Donald Trump. He's just all in on QE and 0% interest rates. But anyway, the point I'm trying to make is that, not only do you have loose monetary policy, but the second point on this list is increased safe haven demand due to fears about the economy and the state of the world. And so you have the coronavirus, you have everything going on that's having an impact on safe haven demand. When people not only fear the Federal Reserve and the loose monetary policies, which are inflationary, they are inflationary policies. So then you also have the fears about the economy and the stock market. So what do people do when they get fearful? They go for gold. And so I think, the coronavirus is not over. There's going to be probably a second wave, if you even want to call this a second wave already, because we're already seeing states tick up in cases. We're already seeing all of this play out. So it would not surprise me at all if we get another shutdown, if there's more stimulus that comes out, which might also be good for the stock market, but I think it'll also be good for gold as well, because the point I'm trying to make here is that gold, when there's a lot of fear, when there's loose monetary policy, it does very well. So anyway, now long term, And we're going to look at a chart of stocks versus gold. I'm going to show you a chart that just goes over the stock market versus the price of gold. Okay, so, and you're going to see that gold has actually kept up pretty well. And we're going to look at that in a couple slides here. But I want to also talk about the bearish case for gold, because I understand not everybody is bullish on gold. So let's go on to the next slide. And so the bearish case for gold is more of like Harry Dent. You know, Peter Schiff, he's more of the bullish type gold investor. There's other people like him. Ray Dalio, he's very bullish on gold. He's a hedge fund manager, multi-billionaire. Then you got to have guys like Harry Dent. But these are some of the short-term and long-term reasons why some people are bearish on gold. And so the first reason, and we just saw this actually quite recently, you know, when the stock market tanked, gold actually went down with stocks. Okay, now it did not drop as much as stocks did, but it's also missed out on some of the upside gains. Okay, so people who always say, "Oh, the stock market goes down," then people are going to be, flooding into gold. So that's not true necessarily, because typically what happens is when stock prices and real estate prices sell off, all assets sell off, including gold, including silver. In fact, silver got really, really cheap. That's another video. But gold sold off to, like, I think it was $1,450 before rallying back, and now we're at 1,770. So pretty good return. Silver, on the other hand, like I said, that was crazy how low silver got for a while. But don't want to get distracted. Anyway, so if fears about the state of the economy and coronavirus subside, then gold may continue selling off. Okay, so if things go back to normal, everything's fine. The Federal Reserve starts tightening. That's the third point on this list. And everything goes back to normal. The Fed jacks up interest rates. Okay, interest rates are at 5, 10%. That would result in a huge sell-off in the price of gold. Now, the other argument here in the long run is that gold underperforms other assets like stocks. Okay, so, and we're going to look at that chart once again. I'm going to show you the performance of gold. I'm going to show you that the performance actually is not that bad. In fact, it's actually held up very well relative to stocks. But that's another long-term argument. You have Warren Buffett, Warren Buffett's a very smart investor. Dave Ramsey says the same thing. He says, well, gold has a piss poor performance. You know, they both say that. But like I said, we're going to look at that chart pretty soon here. But I just kind of want to go over this one more time. So basically, you have short-term bears who are like, no, gold's going to sell off. Then you have long-term bears who are like, you know, gold's going to sell off in the next 5, 10 years. There's a lot of deflation coming. Harry Dent is one of those people. Now, as far as the Federal Reserve goes, and as far as the coronavirus goes and everything going on, like I said, first off, the coronavirus, as I mentioned, I don't think the coronavirus is going away. I think it's going to stay here for probably at least until they find a vaccine or until everybody gets immune to it, because a pandemic, you have to burn the pandemic out. It just doesn't go away. Typically, that's not what happens. So as we're seeing already, the coronavirus is not going away. The Federal Reserve is not going to raise interest rates. They're going to keep money and monetary policy very loose. They're going to keep on injecting liquidity. They're already doing that in the bond market. And so, you know, this is very bullish for gold. So on those 2 points, very bullish. The fourth point, gold underperforms stocks. We're going to talk about that next. And the first point on the list does have some validity. Gold sometimes drops with stock, real estate, and other asset prices. So yes, that is true. And we just saw that earlier this year when the stock market sold off dramatically. So who is right, and should you invest in gold? Now, me personally, I am a gold bull. Now, I don't recommend people go all in on gold and precious metals. But as I mentioned, the central bank policies, the loose monetary policy, is bullish for gold. And so I think you should definitely have some safe haven assets in your portfolio. And, you know, the deflationists, they do have some good points, right? There's some evidence to support what they're saying. Guys like Harry Dent and other deflationists who say we're going to have a huge sell-off in every asset price, everything's going down, massive deflation. But as long as the Federal Reserve is pumping liquidity into the system, as long as they are manipulating interest rates the way they are, I don't see that happening. So yes, we could get a sell-off in asset prices, and I think we will, because stocks are overvalued. But honestly, I think the Federal Reserve will just come right back in and they're going to inject all that liquidity back into the stock market. I've been talking about how the stock market's overvalued, and that's another video. But at the end of the day, as long as the Federal Reserve is there to rescue the markets when the stock market goes down, it's going to go back up. Okay. So, anyway, and the way I look at gold is that gold is insurance. So I typically try to allocate 5% to gold and 5% to silver. Okay. So I like gold and silver. Probably about 10% of your portfolio. I would not go above that. You don't have to have 50% of your portfolio in gold because there are other opportunities out there, guys, and you don't want to miss out on a bunch of different opportunities in the markets just because you're so heavily invested in gold. Okay. So because at the end of the day, there's going to be outperforming assets that just blow gold out of the water. Okay, so that's something else to consider. Now, like I said, we're going to talk about the performance of gold next on this slide relative to stocks. So, and here it is. And this is since 1971. And so as you'll see here, the gold price has actually outperformed stocks according to this chart since 1971. So, before 1971, stocks were just blowing gold out of the water because when you think about it, the price of gold was constant, $35 an ounce. But since 1971, you'll see this yellow trend line here. I mean, especially the last 20 years, you'll see this yellow trend line diverge from stocks to where now it's actually outperforming the stock market on a price basis. Okay, so what that means is not considering dividends reinvested. When you don't consider the S&P 500 dividend, you have a dividend paying ETF or mutual fund and you're reinvesting the dividends. Now, when you factor that in, gold has actually underperformed. But just based upon a price perspective, especially over the last 20 years, you'll see here like in the 80s, this is when stocks were doing very well. And then boom, but 80s and 90s, gold was underperforming. But now you'll see gold has actually outperformed stocks just based upon a price basis alone. Now, people tend to underestimate how much dividends actually have an impact on return. So when you reinvest dividends, let's say 3% compounded dividends per year through an S&P 500 index fund or Dow Jones or whatever it is, whatever index fund you're investing in, if it's 2 or 3%, it might not sound like a lot, but when you compound that over the long run, they actually say that dividends have a massive impact, a much greater impact than people think. I'm not sure what the exact percentage is, but I was reading an article. I think they said like 90% or like something crazy of stock market gains are attributed to dividends. So I'll try to find that article and put it in the description if you're interested in reading that. But yeah, this is just based upon the price alone. So, if you're not reinvesting dividends, then yeah, I mean, you've made more money in gold. But as far as the actual performance with dividends reinvested, then gold is an underperformer. Now, that's not to say it's a bad investment. It's just underperformed with dividends reinvested. So gold versus stocks, once again. So the actual return for gold at the end of August 1971, if you held it to today, would be 7.8% compounded annual return. Now, stocks, on the other hand, like the S&P 500, it looks like 7.3% average annual return. So this is excluding dividends and the reinvestment of dividends. But gold's returns relative to stocks remain impressive for an asset that many consider to be the ultimate safe haven. And you hear all these guys, and I'm not saying Warren Buffett is dumb for saying this or Dave Ramsey's dumb for saying this, but like Dave Ramsey especially, he says, well, gold has a terrible performance. It's only 2% a year. Well, it's not 2% a year. It's actually about 7% when you look back at the correct time period, because it's key to look at the 1971 date, because that's when Richard Nixon took us off the gold standard. So if you look back further than that, then of course it's going to have a lower return because the price was fixed from 1945 to 1971. But to say that gold is a poor performer, it's only done 2% a year, I mean, that's not true at all. In fact, it's actually done a lot better. And that's, gold doesn't pay dividends. That's one of the downside. So you can't compare it to an S&P 500 index fund where you're reinvesting dividends. You have to to compare gold just based upon a price performance perspective. But anyway, just wanted to kind of throw that out there. So ways to invest in gold, and there's obviously physical bullion. You can buy through an online dealer, or maybe you have a local dealer. I have a local dealer right down the street from my house, actually. He's a very honest dealer, and he only charges me like $50 over spot for a gold coin. Now, right now, I can't get gold because he's, everything going on. I haven't called him in the past few weeks, actually, but I did call him like over a month ago. I was asking about silver and gold if he has any inventory, and he said he's all sold out. But when he does have gold and silver, I'll tell you, like, he's a very honest dealer. And so that's what you want to look for, because you'll see some of these gold dealers charging like $150, $200 over spot. I mean, it's just crazy. So don't fall for that. I mean, I've seen silver dealers, people who are selling silver, charging $10 over spot. I mean, it's crazy. So don't fall for that. I mean, my dealer down the street, he charges me $1 over spot. So you want to keep those spreads tight, guys, because that, you don't want to have to pay a huge premium. That's just crazy when you can find much better deals out there. Now, gold and silver ETFs. Exchange traded funds, like they invest in gold through a trust, and then they have the shares distributed. I've kind of gotten further away from gold ETFs. I mean, honestly, if I'm going to have insurance in my portfolio, I want to have it in my hand, or I want to have the ability to redeem it, right? So there are some gold and silver ETFs that will actually allow you to redeem gold and silver, but most of them are not going to allow you to do that unless you have like 100,000 shares, which is crazy because most people don't have millions of dollars to invest. They might have a few thousand, they might have 10,000, but they don't have millions of dollars to buy millions of shares. But I think there are a couple gold ETFs that actually allow you to withdraw your ounces of gold for a premium over spot. I don't know which ones those are. I think one of them might be ounce, OUNZ, but I could be wrong, so don't quote me on that. But if I'm going to buy an ETF, or if I'm going to buy an app like gold and silver apps such as Gold Money and One Gold, which are two really good ones, I want the ability to withdraw my gold without having to worry about having a huge amount, or you know what I'm saying, like having a huge amount, 100,000 shares. That's just crazy. I want to be able to have the gold and silver delivered to my house if I'm going to invest in an ETF or an app like Gold Money or One Gold. And so both Gold Money and One Gold do allow physical delivery for any quantity. So over 1 ounce of gold, or at least 1 ounce of gold, and then of course 1 ounce of silver. So you can withdraw your gold and silver anytime you want, have it shipped to your house. And I think actually One Gold has better premiums over spot. I just opened an account there and I deposited some money. You can download this through the App Store. Just download One Gold to go to the iTunes App Store. But I was looking at the spot prices, the premiums, and they actually look pretty reasonable. So I think One Gold is a really good one if you want to have like a digital gold and silver portfolio. I've kind of gotten away from ETFs just because most of them, like I said, they make you have these huge blocks of 100,000 shares, which is crazy. But anyway, those are some of the ways you can invest in gold. And that's it, guys. So I want to thank you for watching this video. And if you like this video, when you hit that subscribe button, hit that thumbs up button, guys. I do a lot of research on this stuff. It takes me a lot of work to make these videos. So if you guys would hit that thumbs up button, hit that subscribe button, I really appreciate it. Anyway, guys, hope you enjoyed this video, and I'll see you in the next one. Take care.